Hello friends, how are you doing? This is episode 5 of the week just ended that entails everything of my strategy that has to do with technical analysis. All right, so just everything from top-down analysis to market structure to liquidity, supply and demand zones, ICT, and all of it. Okay, so this is what I usually do. Before we proceed, I would like to just comment on what makes a profitable trading. Okay, most people are always fond of hopping from one strategy to another strategy, looking for one holy grail or the other. The truth is that they are being deceived most of the time by people pumping out videos up and down, trying to tell them this is what they need. No, if you already have a good strategy, a profitable strategy, and if I want to define what a strategy is, a profitable strategy is, I would say there are two components that must complement each other. And these components are the risk to reward ratio of the strategy and the win rate of the strategy. Okay? By the time they complement each other and within a sample space of trades, you are profitable. Then in itself, that strategy is profitable. Now, for you to be a profitable trader or not depends on how you also use that strategy. You know, things like your risk management, your psychological um, level of understanding the market will also play a very important role. Okay, and as people used to say, technical analysis is just a tiny part of becoming consistently profitable. Okay, one or two persons have come to me and they require me to show them my traits in order for me to prove that my strategy is profitable. They don't understand what a strategy is. When you look at the strategy and if you feel that the strategy is logical enough, profitable enough, go and back test it. Make it your own. You cannot judge a strategy based on my trading. You don't need it. You don't need somebody's trading to be able to judge a strategy. All you need to do is to come across a strategy, is to develop a strategy, and for you to see that the strategy is logically profitable. And when you see those logics there, all you need to do is to apply the right psychology and risk management to come out with profitability. That's all you need. So you cannot judge. Don't look at anybody. It is you. Trading is about you, you and you. Okay. So you have to try as much as possible to own the strategy and work in line with the strategy. Have a trading plan and trade along. It doesn't mean that if I'm not profitable at the end of the day, I'm not a good analytical, technical analyst. No, there are several persons, of course. It's the case most of the time that we become good technically before we become what? Profitable. Okay? It's always almost the case. It even takes a long time, even after being technically good on the chart, to become profitable. So this is what you need to do. If you already have a strategy that is working well for you, that you have back tested, please, the only thing you see, sometimes when we back test these strategies, we think they are going to be automatic in a real life situation. No, you have not considered the concept of time of formation of these candles. You have not considered them. So this is where your psychology will be greatly tested. Okay, will be greatly tested. Another important factor is your risk management. If you have a good risk management and your strategy is good, okay, in that case, you will not be afraid to take as much trades that line up with your trading system, provided you have a good risk management. Because at the end of a good number of sample space, you should be profitable at the end of the day. This is what brings relaxed trading and makes trading less difficult as it seems to many. Okay, so that is it. Um, I am very certain that what I am going to be presenting to you is actually profitable. Okay, it's just for you to understand the concept, the logic behind it, and to apply it to your own kind of trading. All right. So with that said, we go straight to what we have. We are looking at the week just ended. First of all, I want to apologize for coming up late, and also I want to say that I'm not feeling too well. Please bear with me and just manage with me as we go along in the video. Now, this is the week just ended. what kind of candle was actually printed. Most times, I'm sorry about this. Most times, when you see a candle, let me just lock it. All right. Most times, when you see a big body candle like this, what you might be expecting to see next is a small body candle. Okay. So we have more like a doji, but looking like a very spin bar for the week just ended. Okay. In our previous, that is exactly episode 4. Okay. Like I was saying in our previous um, precisely episode 4, it predicted the price was going to take this particular high, and so we are looking for a bullish week after this week. All right, but more appropriately, what we can be more certain of or certain about is the fact that price is going to take this high, whether we have a bullish week or a bearish week. So some might begin to argue this is indeed a bearish week, uh, but our intention was realized. Our prediction was realized, and that's the most important. So when you have a candle, we have the open, high, the low, and the close of the candle. Of all these prices, the open price, the low price, the high price, and the close price, the least important that we really want to care about is the close price. The close price is the least important because if you are focusing on the close price, then even after securing all these profits, and you want to close your trade at the close price, you might end up doing what? Losing all your profits, okay? Or drastically reducing your profits. So this is what we are trying to say. If the market, for instance, opened somewhere here and expanded upwards, okay, and eventually closed here, all right? So you shouldn't wait for price to come down here before going out of the trade. You should be able to capitalize on this expansion because this is actually a kind of if you print this candle, it's almost like uh, a pin bar, okay? If you print it as a candle. So the point we're trying to make, what is more important is the open price. Why is the open price more important? Because you want to look for manipulation of the open price. For example, if price was to expand higher, okay? So you want to look for the downward manipulation of the open price and then look for opportunity to trade higher. Once you get to your target, take your profit, either partial, whatever it is, and don't wait until you have the close price. Okay, the close price is really not important when it comes to capitalizing on the trading. Okay, with that said, what I'm trying to say is this. It's not as if because the market closed bearish, our prediction was wrong. Based on taking trades, our prediction was very okay because you could have profited from this expansion by placing a buy. So that's the point I'm trying to make. The close price is the least important. And price indeed cleared this high, which is enough. If the target is high, it's going to give you a good trade. And again, we're expecting price to react from this zone, but then the zone was used as liquidity inducement to this particular zone. I can be rest assured that price have already achieved its purpose here, and price might be heading downwards. Okay, so with that said, we can switch to the daily time frame to see how the market interacted on the day-to-day basis for the week just ended. Um, Once again, I want to apologize that Monday price action has already taken place, but that notwithstanding, we still have some learning points. All right, so we have Friday, Thursday, Wednesday, Tuesday, and Monday. This was the price action of the last week, Friday. As we can see, we have this open, market manipulated, the open, and then closed bearish. On Tuesday, we have this expansion where we would have taken the opportunity of clearing this zone or even this high. Okay, that was what we would have done on Tuesday into this zone. All right. Okay. So sorry about that. Really, really sorry about that, please. So we're actually looking at taking the zone, and we could have capitalized on the opportunity of trading into the zone and take off our profit. Okay, with that said, we are going to look very, very deeply what happened here. Let's go to the 1 hour, to go to the 1 hour to see. What we can also notice that the previous week created this symmetrical triangle pattern, and we did know that price might break up higher, or price might actually break down lower. Okay, but with our price action, you can be rest assured, as you're going to see going forward, the price most likely will be breaking down once. Okay, breaking down once. Okay, so with that, let's see how the market actually, or the opportunities that we have during the week just ended based on the 1 hour candle. Or you can see very clearly that Monday's price action opened here, and indeed we have this very clear zone that was here. This particular zone, I think when we switch to the 15 minutes time frame, you are easily going to identify that zone properly. And this was the zone. Okay, we have this hidden base, and this move actually mitigating this base to some extent, and we have this zone that was never mitigated. So um, this becomes liquidity inducement, from Friday. And if I was to take this trade, I would have taken the trade from here and from this liquidity inducement, and my stop is going to be just below this, or maybe even below this, to be safe. And if that was done, um, and try to capitalize on the movement before, first of all, this, that puts in a very nice trade. Okay, so that was the opportunity that presented itself on Monday. Okay, then from there, we also got this great opportunity. I think when we scale up to the 1 hour time frame, I'm going to see it more clearly. So we have this particular zone that was never mitigated. So it was on Tuesday that the market tapped into the zone, and yet we have another great opportunity to have traded. See, you just need to be calm, traded, and you might be targeting this, right? You might be targeting this. But take note, this was a supply zone. Okay, so you can be targeting that, and you can see the great opportunity that presented itself on Tuesday. Okay, so just to show you these opportunities, I was actually in this opportunity, but it was poorly managed. So that's one thing you need to know. So you are not going to judge this strategy based on my trading, because if it's not properly managed, then it's not going to be showing you what actually strategy can do. But since this low could not break this high, could not create a higher high, it was from that point I started suspecting this zone to be violated. If we scale down to a much lower time frame, let's see where this move actually failed. Okay, or let's go to the, okay, we can use the 15 minutes, or we can use the 5 minutes. Let's see where this trend that was supposed to take out this high actually changed from uptrend to downtrend. So you can see we have this low creating this higher, higher low, higher high, and it is at this point that we have um, a change of character here. We have a change of character. When this happened, then it was clear to me that this supply zone, sorry about that, the supply zone was now really in force, and there was another very clear supply that was here, though very tiny. So in all of this, we are linking the days together. Okay, so this is Tuesday. We had opportunity on Tuesday, and right now we are on Wednesday. The You can see the London Q zone and the New York Q zone. These are great areas that you should be looking for trading opportunity. So on this New York Q zone, what did we notice? We noticed this very fine um, manipulation here, and price ended up breaking this low. Okay, price ended up breaking this low at the end of the day, We have this break of this structure here, properly done by this candle, and we have this break of structure. Okay, so manipulation. So this becomes a very nice zone. At this point, it was not properly mitigated, so you could still trust it. And when price did that, this could also have given you a nice opportunity to trade from. Okay, a nice opportunity to trade from. Okay, so that's what we're saying. Into, of course, into this demand zone. All right, to that demand zone, and price reacted from this demand zone. Yet again, the zone could not create a higher high, and instead we have what, uh, a clear manipulation. Let me just take this out because I'm interested in the zones. Let me take this out. I'm interested in the zones. So you see, we have this zone as well. Price came, tap into this particular zone. In fact, this was the zone the market used. You know, this was the zone that the market used in this case. Okay, so the supply zone that the market used at this point. Okay, supply. So from there we have this market trading from this supply zone. So this manipulation break structure. Then we have another one with that supply zone. You can see already we are creating supply chain here. This supply chain, and initially we created this demand chain. All right, so we are now creating supply chain, and to me, since these demands are not able to create a high, then I am going to favor the supply. So already price might be trading from here. Okay, of all these opportunities, I took this opportunity, but not properly managed, and I also took this opportunity on Friday, and it was not properly managed as well. When I saw this consolidation, I just went out of the trade before this move kicked in. Okay, so right now as I speak to you, Monday's price action is already fully developed. This low, this demand chain have been used as liquidity, and they have been run through. And so what we are looking at right now, um, let me switch to the 1 hour time frame so that's possibly the, okay, let me use the 1 hour time frame and see. All right, so what we are looking at now is this price break structure from range structure, very shallow pullback until this point. Price is yet to travel down to discount. So I am most likely expecting price to trade towards its discount and maybe continue lower or even try to react from here, less likely, and then come down. Okay. But what is more important is that price wants to travel down to premium, and this is what you should be capitalizing. Now you don't want to know what price to do after here. Just follow the trade, follow what the market is doing, and actually capitalize on what the market is doing. Especially as you can have this very wide fair value gap here, okay, or imbalance as the case may be, into the premium zone. So I don't know if price gets to the premium zone. This might also be, uh, sorry, this might also be a zone to look at for probably to react from. Or price might be coming down and then have a reaction upwards. Okay, so that is it. Opportunities in the market. Just be calm and place a trade. If I was calm enough, I would have capitalized on this move. If I was calm enough, I would have still been on this trade, and already the market has started coming down heavily. So that's just a secret of being profitable. Have a strategy, be calm, have good trading psychology, and good risk management. With that, I want to wish you the best in your trading, and don't hop from strategy to strategy. Don't go after traders posting YouTube videos every day saying this is the holy grail or whatever it is. Just be you, okay? Just make sure you have a strategy. And if you trust your strategy enough, the next thing you need to do is to be calm. Have your trading plan, follow your trading plan, and you're going to be profitable, not by jumping from place to place. Those are not important. Really, I must tell you the truth. Make it your own, and ensure you understand what you're doing. So I wish you the best in your trading. Thank you.